Pankaj Murarka joins us now, and if I say new tech, Pankaj Murarka would say, I told you so. If I say Paytm, Pankaj Murarka would say, I bought when everybody was selling. If I say Zomato, he says, I didn't buy, but when it comes to Policy Bazaar, he bought a lot. All right, sir, it was a good call. Your portfolio must be right at the top of the ladder. Now that you've made good gains in some of the consumer tech and fintech stocks, are you planning to hold them or are you looking at booking some gains? You got it right, Pankaj. I mean, absolutely amazing. Everybody was saying, okay, sell and go away. But for those folks you're selling, I think you were the only buyer in town that time.
Well, morning, Nikunj. Thanks for your compliment. So, I think we are certainly holding on, Nikunj. From our point of view, these are very long-term holdings, which we probably intend to hold over the next 5, 10 years and maybe longer as well. So these are still very early days for these companies. I think these companies are still very young in that sense. And there's a very long growth curve ahead for these companies. And what really excited us then and continues to keep exciting us when we look at these companies, more importantly, is at a very early stage, a lot of these companies are operating in a oligopolistic market structure. Meaning, just think about it. If you want to, if we want to buy a shampoo, there are about 10 companies out there manufacturing shampoo, or 10 companies out there selling biscuits, or there are 40 odd cement companies out there. But if you want to order food, then there are only two companies out there and they control 95% of the market. If you want to do digital payments, then there are only three companies out there and they control 95% of the market. In my experience of investing, I haven't seen any player making loss in a oligopolistic industry structure. And the good thing is these companies, given the kind of consolidation that has happened for multiple reasons over the last 2 to 3 years in these internet businesses, are operating in an oligopolistic business environment, which effectively means I think the long-term profitability of these businesses will be significantly higher than where their current profitability is. They've already made a pivot from loss-making to cash-generating profitable businesses. But I still think that the long-term profit margins, profitability of these companies will be significantly higher than what it is today. And on top of that, you will get very strong growth in terms of these companies, one, acquiring new customers and mining existing customers deeper. So if you ask my view, I think these are investments which are which are to be held over the next 10, 15 years.
Okay, so you own Paytm, you own Zomato, you own Policy Bazaar. These are three consumer and fintech stocks you own, right?
We also own InfoEdge. It's been a traditional holding for us, which we've held for a very long time, and we think one of the best internet stocks in that sense.
Based on what your understanding of the business model is, the three stocks, and I'm keeping InfoEdge aside because it's a different stock. It's not a consumer tech. It's a cash generating machine, if you frankly ask me. You are happy to own Paytm, Zomato, and Policy Bazaar for next 5 to 10 years. I mean, your view is that these are the portfolio stocks for next couple of years, not for couple of quarters and couple of months.
Absolutely, Nikunj. I think so. I think these businesses, their profitability, meaning I don't see any reason. It might sound slightly audacious, but I don't see any reason why these companies, let's say 10 years out, cannot make $400 million of profit. Understand the next generation. If I look at in my home, meaning there's something which is Zomato virtually is being used on everyday basis, much to my disliking, and I think that's the case with many households. And today, Paytm or Google Pay, digital payments has become an inherent part of our lifestyles. I'm sure all of us are using it.
Much to my disliking, Zomato used every day. Whom are you referring to?
Meaning all of...
Yeah.
Pankaj, I think the usage of Nykaa will also go up quite a bit if you complain about Zomato too much.
Yeah, absolutely. I think the point I'm going to make is today's consumers, which we can relate with our children, they're born digital. They live in a digital world. And these businesses are born digital. So these businesses are very much aligned to the next generation, and they will become the biggest spenders over the next 20-25 years. Mark my word, when this whole internet revolution happened in US 20 years back, that was driven by the new generation. adopting to digital, because that generation was born digital in US, and they led the whole growth in whole digital adoption in US, and which is where the internet businesses had a J-curve growth in US. I think in India we're just 20 years behind that, and we have demographics in our favor. So I think the current generation is born digital, and these businesses are meant for that. So I see a very rapid adoption growth in these businesses.
Now, hypothetically, if you have to sell one out of the four consumer stocks, Paytm, Zomato, PB, Fintech, which one would you sell? And what could be that event or trigger which would, in a sense, rethink or force you to rethink your investment strategy?
If you ask me about risk, the point is digital businesses are prone to disruption, because the best ideas in technology do not happen in large established companies. The best ideas in technology will not emerge out of Reliance Industries or Tata Sons. They'll emerge somewhere in some garage or some college campus. And then, because capital is available, and if that idea is executed well, it can disrupt. So in digital businesses, competition or disruption can come from the most unexpected corners. So when we look at these businesses, we need to keep an eye whether the owners, promoters, founders, they're keeping an eye on emerging competition, and whether they are making right strategic choices in their business so as to sustain and probably enhance their competitive edge. I think that's the most important thing in digital business, because technology can be truly disruptive and it keeps evolving. And more importantly, in technology businesses, it's winner takes all. So you have to be amongst the 2 or 3 guys who are going to lead and dominate that space. Otherwise, your survival is at risk. So I think we need to always keep a constant eye on emerging competitive intensity and disruption. And as I said, it can emerge from the most unknown or the most unexpected corners.
Anisha is nudging me and saying that, bhai, ye to purana ho gaya. This is what we discussed, what Pankaj was buying in January and February. What is he buying now?
As investors, we are very lazy. So we intend to buy 2 or 3 stocks in a year. And then what we like doing most of the time is just sit on them. We are like the ducks. We just sit on our stocks for a very, very long time. And while we spend a lot of time doing our research and engaging with the investee companies, understanding the environment better across all industries, but when it comes to portfolio actions, we resemble a duck, So we take a very, very easy approach, and we don't make more than 2, 3 new investments in a year.
Pankaj, quickly a twofold question. So, if others were a duck like you and haven't participated yet in the likes of Zomato, Paytm, is it still a good buy for the retail investors? And secondly, are you looking at expanding your own exposure to maybe the likes of Nykaa and Cartrade now?
So one, I think absolutely. As I said, meaning maybe the stocks have moved up by 20-30% in the last few months. But as I said, these are very early days in the life of these businesses. Understand this. The top 5 big technology companies constitute now 20% of S&P 500 in US. Yeah, I don't see any reasons why 10 years out, some of these technology companies will be part of the Nifty index in India. They'll be amongst the top 50 companies in India. Meaning the jury is still out, which one really makes it. But I have no doubt in my mind that we'll have, some of these companies being amongst the top 50 companies in India. So I think absolutely it makes imminent sense for investors in a long-term view to invest into these companies. 20-30% move is still, very early in the whole life cycle of these companies. Some of the other companies you mentioned, so obviously we keep evaluating these companies on a consistent basis. Obviously, we have questions on business model of some of these companies, whereas in some other cases, probably maybe valuations are not apt or appropriate for us, but at a right point of time where we have confidence on their business model and growth prospects and valuations, we'll be happy to own them. Structurally, we are a secular bull on internet. I think this is the most exciting theme that I have seen in the last 20 years. After the IT theme I saw in 98, 2000, after a gap of 20 years, I'm seeing something as exciting as it was with IT way back in 99, 2000.
All right. Thanks very much, Pankaj. Good to have you on board as always and get in your take. Lazy investors maybe, but certainly that strategy is doing well for you guys.